And good afternoon, all you market clubbers and Stock Trade Genius members. This is an exclusive report for special market club members put out on April 27th, 2015. Time now is about 1:25 p.m. Here's what we're looking at. We're looking at a company called Payc. First of all, we're in a green market. Let's start with the top-down strategy. So you'll notice we're in a green market. Got a little bit of a reversal going on today. But nonetheless, the trend seems to be intact. We've got a newer high, and we still have a higher low. So the trend is still intact, but one of these is not going to totally make a reversal unless we get a lot of them in a row. So the market is up. Now let's take a look at the weekly on a stock that we're recommending at this level. It's called Payc. Notice how Payc here had a double bottom, and it broke out from a double bottom, and that was a fairly early stage. We have a stage 2. So this, you'll notice it's an IPO, fairly recent IPO, and it's a stage 2 base building on another base here with this on top of a stage 2. So this is like I look at this as a consolidation. So you'll notice this box here is consolidating. It went down and it tested the 50-day moving average a couple of times. Here's one. Here's another one, and it recovered that same week. Here's another one. Here's another one. It didn't quite recover. So it's trying to hang, and then finally it couldn't handle it anymore. But it did not do it on gigantic volume. It did do it on some significant volume from the week before, but it closed at a fairly low part of the range. But last week we had a big recovery in Payc on increased volume. Notice how that volume has increased. So that's a positive for Payc. We call that a save week, a bounce week and a save week. So it bounced off to 50 and saved itself above the 50 or the 10-week moving average. This week we're down just slightly. And we don't know what's going to happen this week, obviously, but here's our strategy. Our target is, first of all, we enter at around $33, which is where it is right now. And we're looking at a target of $37.69, a stop price of $31.75, and your return on equity in the company is 24. Earning per share growth rate at this time is 66. And we don't love, this is the only number that we don't love. It's the up-down volume, which tells us that there's a little bit more selling of late than there is buying, but not so significant that we would run the other way. The stock has incredible relative strength compared to the rest of the market. It's doing better than about 98% of the stocks out there. So that's our strategy. We look at a target price of $37.69, which is an extension of this Fibonacci area that you're seeing here outlined in these magenta numbers. And the top end of that on the 1-to-1 extension is $37.69. Of course, it could go higher if we get some volume and strength, things like that. This is the ratio we like. Entering in it at $33, your downside is $31.75. That's $1.25 on the downside. On the upside, we have about 4, almost 5 points. So that's a nice about 4-to-1 ratio reward to risk. That's what we like. So taking a look at Payc, look at the fundamentals, and then see how it's setting up on the charts. We like this long-term consolidation. Tells us it's probably going to bounce higher, and the probabilities are on our side in a green market. Good luck.